Morning. Rather than me replying individually in email, I thought I'd just quickly throw a video together in regards to 6 point questions in particular. The 6 point question I set you. Now, bear with me, I've got it up on my screen to remind me what it is. Explain how debt factoring might benefit a retailer that is offering long-term credit to its customers. So it's a 6 point question. All this is doing is asking you to demonstrate knowledge, understanding, and applying it to the case study you've been given, or the situation rather that you've been given. Now, the situation you've been given in this is that you've got a company that is offering long-term credit to its customers. Now, that would be a firm such as DFS, Discount Furniture, whatever I don't know what the acronym is, furniture sales, or even a company that offers 0% interest over 12 months or 2 years. So essentially, this business is exchanging an item for the promise to pay later on. So you buy £1,000 sofa, and over 2 years you're paying, I don't know, what was that, 60 quid a month. So the problem for the business there is that they've given £1,000 worth of goods out to somebody, but they don't get any money or the total money for 2 years. Now, the way business normally works is you sell £1,000 sofa, someone gives you £1,000, 400 quid might be your profit, and then 600 quid was your costs. So you've covered your costs, you've got some profit, and then you've also got cash to then buy new stock. If you're constantly giving stuff away, I know you're not, because you're getting the money 12 months, 24 months down the line, but you don't get the cash then and there to allow you to buy new stock to then sell to other customers. So this business model has a problem. And how a lot of firms get around it is, one, initially they might have a big investor who puts a lot of money up front, and so they have a stack of reserves to play with, but more than likely they will use debt factoring. Now, I said to you guys you could do some research before this. Prep yourself for the question, only a 6 mark question, 10 minutes, no more. But you could have done some pre-reading to get yourself sorted. Now, debt factoring is simply where a firm sells its receivables, so the amount that customers owe it, at a discount. So if it's sold £1 million worth of stock, they have £1 million worth of receivables, so money owed to them, but they haven't got any cash. So what they'll do is they'll go to another agency, a credit broker, or whatever you want to call it, and they'll sell that £1 million worth of debt for £800,000. So what that means is they've got £800,000 in cash that they can now use to spend to pay bills, new stock, whatever it might be. And the firm they've sold that debt to have just bought £1 million worth of debt for £800,000. So they'll make £200,000 profit on that. So the question is, explain how debt factoring, selling your debts or money owes, receivables, is going to help a retailer that offers long-term credit. Well, the first thing you do is you explain to the examiner that you know what debt factoring is. And I've just said what it is. So that's your first paragraph. Always start off with that if you're not quite sure. Give a basic definition. You could also go on to explain what's meant by long-term credit. Now, long-term credit, in business terms, tends to mean actually 5 years plus. Medium, mortgages, that sort of stuff. But it doesn't really matter at this level. But what the sort of stuff you should be doing is obviously understanding that you know what debt factoring is and how it operates. I've just explained that to you. And that would be assessment objective 1. Now, out of 6 points, that would get you 2 points. You've just done the basics. You've shown knowledge. You've told the examiner that you know what debt factoring is. It's the on-selling of your own receivables, money owed, to a third party at a discount. So you don't get all the money back that you're owed, but at least you get some cash. Then you need to apply it to the context. Now, the context in this situation is long-term credit. Now, what it'll do is it will allow an inflow of cash. So it's cash flow. It's not a cash flow question, but you can talk about cash flow. So it allows an inflow of cash. So it improves your cash flow status. And then that allows you to pay your wages, pay your bills, use phrases like fixed and variable costs. And it also allows you to buy or acquire new stock so that then you can maintain or continue that process of allowing people to buy stock from you at using long-term interest, or rather credit terms. And so it allows your business model to continue. So obviously, you don't need to talk about this in it. Your business model needs to have taken into account that you will probably sell your receivables on at a discount. So you've got to be aware that if you sell £1,000 sofa, that in reality, once you've done debt factoring, you'll lose 20% of that. So it's really, you've sold that sofa for 800 quid. But you don't really need to talk about it. And then you need to talk about how that debt factoring either is a benefit or whatever it might be. So I've already said that it improves your cash flow. So I've gone to AO3 already. So with these 6-point questions, 1 or 2 points out of 6 is your definition. What is debt factoring? If you don't show the examiner that you know what debt factoring is, then you're not going to get AO1. Some students might be able to show that they understand what debt factoring is within the answer to the question, but just do it simply. AO1, first paragraph, first sentence. Tell the examiner you know what it is. Step 2, how is it linked to the situation? Well, I would sort of almost do it in one thing. It improves the cash flow situation with an inflow of cash. Show the examiner you understand, however that won't be the full amount of the debt or the receivables because you've sold it as a discount. More context and application there. How will it be a benefit? This new inflow of cash will allow you to purchase more materials, more stock, and then that will allow you to create more revenue and so forth. Nice and simple question. Don't waffle, keep it simple. It's 6 points. You could nail one of these questions in 6 lines. Don't overcomplicate it. If you want to, by all means, have another go at the question and email it to me, and I will remark it, see how you've done with that. Okay, cheers. See you later.